let's go ahead and make sure we have a good structure for your account. All right. And let's just make sure we rediscuss account structure real quick.
Okay.
All right. And just make sure we're on the same page. So you have a $9,600 account right now, cash. And so what's the golden rule of risk? Like, what's your max risk per trade, percentage wise?
I hadn't seen it. Is it 10%?
3%.
That was 3.
3%. So max per day would not exceed 10%, but realistically, to hit a max loss amount per day is super rare. That's why we structure our accounts the way we do, to where it's a fluke if we have a max loss day. And if we have a max loss day, it's so easy to recover from. If your per trade risk was 10% and you had 3 losses in a row, that's 30%. That's a lot to make back versus 9%.
Yeah.
So max risk per trade should not be any more than 3%. That's the golden rule. That's what we're going to scale to. So that would be 96 times 3. So you're talking like right under $300. So it's at like 280, give or take, 280, 290. Let's just call it 280. So right now, you should not even be positioned on a trade to lose more than 280. That's a non-negotiable. If I take this trade, right, and I take 2 or 3 contracts, you got to make sure that your loss is not going to exceed this amount. Okay. But right now, I want to hold off on this for now. This is what we're going to work ourselves into over the next week or so. Right now, I want to scale you down to a 1% to start. Okay.
Yep.
All about good habits. So that's going to be $96 right now. That's your max loss per trade. $96. We're going to cap it. But what does that also mean? You see a 2-to-1 setup, 3-to-1 setup. That gives you potential to do what? Make $200 to $300. In just 1 or 2 trades, you could already recover some of this drawdown. And we're not taking on a lot of big risk. Like, is it easier for you to see a $96 loss and accept it, or a $300 loss? Which one is just easier to, like, it's whatever?
Oh, definitely the $96 one.
Right. And so emotions won't surface as much at a $90 loss compared to a $300 loss.
Yeah.
So it's easier to, like, keep the emotions in check. And that's the goal. Keep emotions in check and learn how to do that day in, day out. So let's focus on the 1% rule of your account. $96 max loss per trade. And so you know how to do that math. Options, risk on the SPY, what's my loss per option contract? You know how to do that, right?
I need to rewatch the video. I watched it the other day and was doing it, and I hadn't been doing it for the last couple of days, and need to refresh myself on it.
Gotcha. Let's make it easy real quick. All right, let's keep it simple. So let's say that you have a 3-to-1 setup on the SPY. Like, that's your analysis. Let's say, like, this is where you wanted to get in, long. Here is your target up here, and here's your stop. All right, Let's just say that's the plan you built. So let's just say this was 50 cents of risk from entry to stop, 50 cents on the SPY. Let's just say it was a 3-to-1, and you see that realistically you can get $1.50 out of it. That's the starting point, right? We need to do that risk reward tool on the SPY, entry, stop, target.
Yeah.
And then when we do that, we get the amounts that we need. 50 cents, $1.50, cool, 3-to-1, awesome. Then next step is go look at the options. Which option you want to take? Well, if this is a long, you would get calls, take next day expiration, but I want you to be focused on the delta. Remember, we go between a 30 and a 40 delta. Never go above a 40. Really don't want to go below a 30. Let's just say we found one that had a 40 delta. And I'm going to put D, 40 delta. So for every 1 contract that we take on this hypothetical trade that has a 40 delta based on our stop of 50 cents, what is our risk per contract?
It would be 40 cents for every dollar, right?
Correct. So 40 cents or $40 for every dollar the stock moves.
Mm-hmm.
So if your stop loss on the stock is 50 cents, what would that be?
Uh, 20.
Exactly, 20, 100%. So you've just analyzed what your risk is per one contract. And so your risk per one contract would be $20. So that 0.40, 40 cents, if you remove the decimal, it's $40.
Mm-hmm.
And that's what it is per dollar. So perfect. So you're risking 50 cents to make $1.50. You're going to trade an option that has a 40 delta. You've done the correct math. For every one contract I decide to take on this trade, I'm going to lose $20.
Yeah.
So if your maximum risk is $96 on a trade, how many contracts can you take on that one particular trade?
4.
Because if you took 4 contracts, that means you're going to lose $80. But if you hit your target of $1.50, it's easy. It's a 3-to-1. Well, it's 3 times your risk.
So it'd be 3 times 80.
Exactly. It'd be 3 times 80. So that's going to be
240.
240. Yes. So 240. So that just feels a lot better, doesn't it?
Oh yeah.
It's like I got $9,600 in my account. Like I can literally risk under $100, and I have potential to make 2, 3, 4 times that. I have potential to make $240, and I only have to take 4 contracts. I don't have to take 10, 20, 30. I can take 4 contracts, and I can still make 240. You give me 2 of those trades, and they're nice winners. You've recovered your drawdown, and now you're feeling good again. And in the moment, it's like, dude, $96, it's not going to faze me. And you already know what that is ahead of time. You know ahead of time before you even click the buy button on that trade what your loss is. So guess what that eliminates?
Going over my max.
Well, yeah, going over the max, number one. But number two, why are you going to look at your P&L now?
Oh, yeah, I already know what it's going to be.
You already know what it's going to do. Like, you know that if the trade goes down that 50 cents and you click the sell button and then you look over at your P&L, you're going to be negative 80, give or take a couple bucks. But you already know what the loss is going to be. If it runs up to your target and you sell it, you already know what your reward's going to be. So now it eliminates the need to even look at the P&L because you already know what's going to happen. But what does that allow you to do now? Focus on the trade, right? Because let's say you're in that trade managing it and you're like, fuck, this price action sucks. And you get out at negative 20 cents. What have you done? Substantially lowered your loss on the trade.
Yeah.
If you were too busy focused on your P&L, you would have never seen a reason to get out of that trade before your stop was hit. But maybe you saw something and now you can lose $20. That's a lot better. And maybe the trade goes way past your target and the thing's just ripping and running. Well, if you're too busy looking at your P&L, you're just going to take that 240 and you may miss out on more upside if the trade's doing really good. So it allows you to manage the trade to get as much from the trade as possible, to always make sure you're losing the least amount as possible. And that's it. That's what I want you to refocus on. Something you were doing very consistently in the paper account is just building those plans. Do your risk reward analysis. Find the delta. What's the risk per contract? How many contracts can I take to not lose that $96? 4. And then just take your trades and manage the trade. And now you don't have a reason to look at the P&L. Make sense?
Yep.
And that's all I want you to do, man. Like literally, that is all I want you to do. And that's going to get you back to the basics, back to what was working, build your confidence back up, start to build your account back up a little bit, which, you know, $400 drawdown is nothing, man, especially as a new trader. That's nothing. Just a few little tweaks, few little adjustments. You'll make that back and you'll be on the track to profits again, man. Because you got the potential. You've seen that you've been doing it. You've been making nice trades and making good money. So you know you have it in you. Just a few little adjustments is all.
Yeah. I guess whenever it got out of hand, I started watching that P&L. That's whenever everything got pretty out of hand.
That was like the one thing that did it, was just focus more on the P&L?
Yeah, I think so.
Gotcha.
Because I would see it coming down. That was making me just lost all my willpower whenever I was watching the P&L. Something would come down to where my stop loss was, and I didn't want to lose that money, so I hold on to it. and hope it can
Right.
go back
You don't want to lose it. You're like, damn, that's a little too much. I don't want to lose that. And you're like, fuck. And then you make the decision to hold on to it a little bit longer. Right.
Yeah.
And again, it happens. It happens a lot. And so this one little tweak is going to completely remove that. So if that's like been the one main thing that's led to kind of where we're at right now, which again is not bad at all. Okay. It's like, okay, then how do I get back to just focused on the trade, not the P&L? If that's the one key problem, well, this right here is going to allow you to do that. It'll be easy for you to do that. All right. But I'm proud of you, man. You've come up, you still have come a long way in a short amount of time. I mean, you are coming into your 45-day mark, maybe closing in on 60. And so you're to the point where you know what you're doing in the market. You're taking good trades. You're seeing good setups. Have we made a couple mistakes? Sure. But it's a part of the process. We're going to. It allows us to learn from the mistakes. So we learned how to remove, focused on the P&L, only focus on the trade. Restructuring your account for now to make sure we mitigate our risk, but still have potential to make a couple $100 a trade consistently, to start stacking those base hit wins, to start seeing money come in. And now we have the opportunity to start really working on the mindset and really developing that. And
yeah, I think that's going to be the key factor here. Get my mindset right and doing what I know I'm supposed to be doing instead of ignoring what I've been doing.
100%. And the fact that you realize these things in the first place, that you're aware of this, that's the first step. The next step is say, here are the things I'm going to do, and do those every day with intention. Like build plans in all your trades like we just did every day with intention. So what if we like start to notice we're forgetting? Well, let's write something down on a sticky note. You know what I mean? Write something down on a sticky note that says build plans on all my trades and don't risk more than 1%, just to remind you to follow the step intentionally. And as long as we follow those steps intentionally, what's right around the corner? Success. Good results, man. All the problems just naturally dissipate and fix themselves because we're intentionally focused on what's actually going to work and get us profits in the market. And so, yeah, you're pacing good. Good habits are built in 21 days. So if we just really focus the next 3 weeks on all the mindset stuff, the good habits, our non-negotiables, everything like we talked about here today, we're going to see some growth over the next 3 weeks mentally. We're going to see our account recovering. We're going to start noticing we're back into the consistent profitability stage. And that's my goal for you is like, I want you to be consistently profitable. Even if it's like a couple $100 a trade and you're able to do that consistently and stack 2 or 3 of those a day, those little wins. I mean, what is $300 a day, for example, which doesn't seem hard to do with that structure, but $300 a day on average, and let's say you only take 10 trades, or you only take 10 days to trade in any given month, that's still like $3,000.
Yeah.
Right. And that's your first like full month of profitability to be able to make $3,000. Based on that structure, would you find it to be easy to hit that goal or difficult with what we discussed here today?
I think it would be easy.
Easy. And you're pretty confident saying that would be easy, right? You feel like, yeah, that's pretty easy. I'm confident in that. It doesn't feel like a stretch. And so what is that percentage wise, dude? Let's say we do get you to the $3,000 mark, which I think is super realistic on a low end. I think we can do more, but let's keep the goal low so we can surpass it. That's 30%.
Yeah.
In a month. Most people get like 10% in a year if they're lucky. You know what I mean? So you could do 30% in a month, and that's keeping the goal like super low, super realistic to where we can easily crush it and surpass it. And the most important thing is you feel confident that it's easy and doable. And so that's going to drive you to make the good decisions because it feels comfortable to you, you know?
Mm-hmm.
That's it, brother. That's all I want you to focus on, man. That's all I want you to do. And I think that's just enough to get you back on track. It really is.